Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Welcome to Digital Currents. Mark, happy Friday. Happy post-Halloween. It was probably about a 2-week celebration or longer in my house, making it the official longest holiday of the Segura household. How was your Halloween?
Absolutely. It was good. It was good, although I was relegated to passing out the candy, and grandkids were off with friends and Will was off with a friend. So it was good. But happy All Souls Day, right? Mm-hmm. November 1st here. And lots going on to report. A couple reveals, though. I'm actually going to do something. I'm going to do a little proof of work here in a minute. But, just the normal. I got the Bitcoin Orange going.
This Friday.
I have the old school Bitcoin stock game from 2011. But the big reveal. The big reveal. I'm going to do it. Now, we'll see how this goes. If it's, and this could be our theme song, but little proof of work of the.
Listeners, you're in for a treat. Mark has brought out the 6-string. More reasons to look at the video.
What's going on will be our new theme song. So there you go.
Wait, it didn't sound like it came across too much on the microphone, but for those that did not have the video, it is proof. I saw Mark with 6-string in hand, good up and down technique, and I can see that you've been practicing, Mark.
Yeah, so, again, I could not even tell you what a chord was 5 months ago. So the fact that I can play something that almost resembles music is pretty cool. But yeah, so someday we'll jam together, but I'm not ready.
I love it. I'll just use that as an excuse to buy another guitar, which in my opinion, you never really need another excuse. Yeah, exactly. But they're amazing to just own and enjoy. A lot to discuss. Actually, one story, Mark, that we didn't get to last week, and obviously want to touch on some of the highs we've seen, but the biggest acquisition in our space, Bridge by Stripe. So the big stablecoin provider, over $1 billion. Mark, I'm going to say that we have told the listeners that M&A was going to heat up in our space.
Yeah.
I think this is the first of many to come. And some would say, well, this isn't necessarily something changing the game. There's so many stablecoin providers. But as we've talked about, it's not always the companies with the flashiest tech or the flashiest decks that get acquired. It's some folks that are doing kind of the more simple blocking and tackling. And this, I think, will be hopefully a pretty good marriage here, because we're starting to see a lot more of these legacy Web 2 companies add on to the Web 3 component to kind of get a little bit of this payment flow. Saw with Robinhood earlier this year, now with Stripe. And I wanted to see your reaction on this, Mark, because we have been advocates of stablecoin as sort of a new base layer of digital money for some time. What are your thoughts on now?
I think to your point, I think it's the bursting of the dam, so to speak. Mm-hmm. There's a lot of technology kind of behind pipe that's ready for prime time. There's a lot of interest on a global basis. I think we talk about this all the time when we're talking about companies and deals, and there's just so much going on in other parts of the world that Americans are like, well, we're the only ones that do crypto. Like, no, we're a little tiny fraction, and we talk about it a lot, and we got bad regulators, and hopefully that changes next Tuesday and all this good stuff. But I do think it's really interesting when you think about the big picture of the internet, right?
Mm-hmm.
Which was, the internet when it first came out, it was, what do we need the internet for? What do we need to be connected for? Yeah, I mean, I got a computer, I use it occasionally, it does some stuff, but I can go to my books and I can get the things I need, or I can, ask somebody a question. I can stop and ask directions. And, it turns out that having all the information in the world at your fingertips is pretty useful.
Mm-hmm.
And that functionality disrupted two very large industries, right? The industry of commerce by, e-commerce, but more importantly, the industry of media and information. Those are big industries, totally disrupted, shift in where the wealth went. Well, now along comes this blockchain technology, and it's blockchain technology and the applications of that technology that are now going to disrupt the largest industry in the world, which is financial services and money. And Bitcoin has, right? And people don't even really know it yet. It is digital gold. It is the future base layer of money. But then there's these other applications like stable coins where you think about, SWIFT around the world and the dominance of the US dollar, the hegemony. And well, yeah, if we have a system that everybody has to use and has to use a certain currency, and then, well, this is the part we like best. I mean, we mean the government. So I guess I shouldn't say we, they like best. They get to control who's in, who's out, who gets sanctioned, who doesn't, who can use this system. And, now we've got competing systems around the world. You got the BRICS, which is up to, it was 4 countries to start, and then kind of 5. And then now it's 32. And the vast majority of the population of the world is in this other block outside the Western block. And they are realizing the same way they did with other technological evolutions. We talk about, copper wires were a limitation because how do you string those across all of Africa? Well, don't. Just go to wireless. And so get better cell service in Nairobi than you can in New York City. So I think it's a long-winded way of saying I really do think stablecoin rails are likely to be the way you transfer value. Like, we all have used Apple Pay or Google Pay or whatever. Well, what are you really using? You're using the same silly stuff you've been using for the last 50 years. It's Visa and MasterCard. Just put your number in here, and it's another little technical. I'm sure someone's taking a scrape, so you're paying even more. Although you don't pay it, the merchant pays it. Well, then the merchant raises the price, so you're paying it. But ultimately, if I can transfer value to you instantaneously, and the blockchain enables it for free, which I would say free is the wrong number. I mean, we do need some payment, some flow, some revenues. And I think that's why someone like Stripe, who has made huge inroads in the point of sale world, is saying, well, geez, tapping a Visa number in a phone, that's no different than tapping a wallet in a phone. And if that wallet goes peer-to-peer, I just cut out all those middle people. And that, so we talked about $7 trillion a year of slippage that suddenly can become someone else's revenue and opportunity and profit and maybe even some savings that normal folks could benefit from. So it's pretty good.
Yeah, and I think this is also kind of this sweet spot that we talk about. Obviously, if you are an acquirer or an acquiree rather, you would love to give up as little of your company as possible to the investor to kind of help with your return. But there is this point, and we're starting to see this a lot within the market and what it means for the broader VC ecosystem. They recently raised around $58 million in August 29th. And that valued the company at $200 million, which is this sweet spot, right? So when you kind of already begin to scale, you found some product market fit. Again, they were not the first stablecoin company. I think that they were able to sort of create a pretty easy to use solution And they also had some legacy roots because the founders were formerly exited to Venmo on another payments company. And, there's Sequoia backs. There's a lot of these kind of legacy ties into the system that kind of led to their success. But once you get to this 200 mark and in the hundreds, it gets to be very attractive for an acquirer because you can kind of get maybe that, low digit billion mark. Once you start having these very high valuations that we experienced in 22 into a little bit of 23, your exit strategy really gets truncated. And if you're too young of a company, you may not have reached that escape velocity and you're just trying to scale up. So we're going to see more of these companies that are right around that 100 million to call it 300-ish million get acquired. That was a nice 5x return for these guys. And I think, what I'm curious on, Mark, is this idea that, we always say, does the world need another stablecoin company? And I don't think that we're done yet because payments are very much a local thing. Like I didn't know this, and I'm guilty of knowing this. I had some friends. We went on a trip in Mexico. I said, "Oh, no worries. Like I'll send you Venmo for X, Y, Z." They're like, "Oh no, we don't have that in Mexico."
Yeah, great.
So I was guilty of this sort of U.S. centric idea, and it's probably to the point you mentioned earlier, Mark, that governments obviously influence financial policy, and banks are the ones that ultimately onboard customers. So if that system is sort of locked out in a country by country basis, especially when you're crossing borders, then you're going to need more stablecoin Web3 on-rampers to facilitate low-cost fees and transactions that basically the underbanked are going to require. And that's part of the reason why we've been investing very heavily in these areas and why it will not be a winner-take-all system. And I think, you could say, well, that's kind of inefficient, or you can say that is perfectly decentralized in terms of how the underlying players work. And I think, Mark, it also speaks to another story that is percolating on this idea of Web3 enablement in payments. So we've made a lot of investment in the Middle East. They have in turn made a lot of investments in blockchain and AI. So now Abu Dhabi, there's a firm out there that just launched the first tokenized U.S. Treasuries fund.
Right.
And I think that this is kind of interesting, right? Because here is one thing, Mark, I'll probably need some explanation on. We've talked about digital twins for a long time, financial assets. There's some value that's getting done there. But I guess the talk track for this kind of a move was it would provide folks in the region this access to the first tokenized U.S. Treasury fund, domiciled in Abu Dhabi, and it's designed to buy units of ETFs from BlackRock and State Street and other U.S. Treasury bills that are tokenized into digital assets. I guess, my question is, they're trying to aim to reach 200 million. My question is, why can't those investors just directly access the ETF in the first place? But, maybe I'm missing the point here, Mark, in that I think this is a good omen for the ecosystem. Again, another showing that region has been supportive to our industry. What are your thoughts when you hear things like this?
Look, innovation is going to continue to push into all areas, geographic, political, et cetera. And so I think there are certain parts of the world that are being more forward-looking. The Middle East right now is one of those. They basically said, look, we got to do something. We got to diversify away from oil that's been our mainstay forever. So we got to embrace this new, digital age. So they are making investments and promulgating ideas in a lot of different areas around all things digital. And that could be robotics, it could be space, it could be, payments, it could be, tokenized assets. Now, the other part of it is the legacy system is like, well, okay, but how is that good for me? So let's take BlackRock. Mm-hmm. They own a lot of the assets, trillions and trillions of dollars of those assets in their old wrappers, stocks, bonds, ETFs, mutual funds, et cetera. And so they're like, well, wait a minute. Well, if you can just buy this Bitcoin stuff or this Ethereum stuff directly, well, that means I'm less necessary. I like being necessary. I like charging fees for my necessariness, to make up a word. And so okay, how about we create a big ETF and we'll buy the Bitcoin? And people say, well, okay, but that's not Bitcoin. Well, yeah, I mean, there's Bitcoin in there, and yeah, you're buying a wrapper that you probably don't need. But there are people who say, well, I don't want to deal with a wallet. I don't want to deal with direct. And just, it's kind of like people who use a Coinbase account. Same reason. Facility. It's like, why? You could keep all your money in your house. You could and spend it, but why? I mean, put it in the bank, and then you can spend it electronically instead of having to cart around Sacco money, where you get hit over the head with a wrench. It's a long answer to say, yes, you could buy these ETFs directly. So why do you need a fund? Well, the people that manage big pools of capital have trusted brands. And so they can go to these countries and say, let us do it for you. And now another example was, and this was reported, and I haven't seen it corroborated, but it was reported, that the big what do they call it, permanent fund in Saudi Arabia, $900 billion, almost $1 trillion, committed $40 billion to Andreessen Horowitz to do investments. Like, okay, guys, you don't need them, to do, if you're going to do $40 billion of venture capital, you could probably get people to come to you and give you the best ideas. I mean, if you got that much capital to deploy, and then I go, but we trust them. They have the brand, all the best entrepreneurs are going to go to them. Okay, it's a good case, but 40 billion is too much money to do venture capital. You can't do
Agreed. A new asset class.
You can do other things. You can do growth equity, but even that, it's almost a new asset class to your point. It's almost like, hey, this is a big M&A pool and we're going to wait for the best technology that we're going to buy. Maybe that's what they're going to do. But I do think these regions, because they're new to the game, right? Abu Dhabi is new to the financial services game. They've been focused on industrial services for most of their life as a country. So I think they're like, hey, let's partner with these big dogs, and then over time they'll learn and they'll probably go direct. But I like it as a signal of the viability of the construct. I forget how to turn that off. The viability of the construct that every asset, every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every private business, everything will ultimately be tokens. What's a token? A token is a line item on a ledger, on a blockchain. I will argue secured by proof of work. Others will say proof of stake, but I'll say, secured by proof of work. So, the best blockchains, most secure blockchains will store the best assets. And over time, we will trade these tokens the way we normally trade electronic QSIPs. But remember, the thing about a QSIP is there's actually a physical piece of paper sitting in Dallas, Texas, in a file drawer that has that alphanumeric QSIP associated with it. I'm just scratching my head going, why do we have paper? I mean, we don't need those paper documents anymore. We can have true digital assets in the digital realm because of blockchains and because of what Satoshi Nakamoto 16 years ago yesterday gave us, right? As Eric Schmidt said, the gift of Bitcoin is amazing, right? It's the future of money, the base layer of money, awesome. But the really bigger gift was this idea that now we can actually have unique assets in the digital realm that are provably unique. He said, yeah, a lot of big businesses are going to be built on that.
Yep. And I'm seeing that kind of maybe shifting gears into talking a little bit about AI. I love when we start seeing news stories that talk about a new trend when they've been things that we have kind of been seeing for a number of years. So for the loyal and avid and the new listeners to Digital Currents, you guys were all over these stories years ago. But the updates on the funding side have now been very promising about crypto plus AI or blockchain plus AI as being the new thing. And we're seeing a lot of attention that's being dedicated here. There's some reports that just came out from Q3 that, just AI by itself snatched up about 30% of all venture funding over in the third quarter. So about, $12 billion, 30% of that going into AI alone. And of course, the crypto markets have been coming back. We've received some all-time highs, some fresh inbound interest. And we're starting to see some points of commonality in some of these hybrid approaches. You're getting to the point now, Mark, where you're hearing that blockchains are holding back AI, which is very, very interesting. So I did a little bit more digging and found that a lot of activity in the AI space is kind of in a couple different categories. One, it's this auditing of smart contracts, which basically just means, is the code I'm writing and executing going to be, sufficient and compliant with what I wanted to do? And then agents to basically help create fast error smart contracts to do that kind of loop. And a lot of this activity is happening on Base, which is a layer 2 off of Ethereum. Mm-hmm. And so we've been seeing this surge that's occurring in the markets, and a lot of questions about, why are markets up? And, there's obviously the sort of the political tailwind, but I think that there is also a tech reason for this, that people are just finding more use cases. And then, of course, they're getting rewarded through this amazing, liquid token instrument known as cryptocurrency, and whether it's ETH or whether it's Bitcoin. So this is not a new trend, Mark, but it's now making headlines.
No, look, the thing I really think is amazing about this era, right? The Web3 era, or the new internet, or the better internet, whatever we want to call it, the evolution of the internet of value, is this idea that in the first internet, there was all this innovation around protocols, right? Protocols that we're using right now. I talk about this all the time. Voice over internet protocol.
Right.
It's a pretty amazing thing. Now, we couldn't hear the music over internet protocol because my microphone was set for voice, but which is probably good for me. It's kind of like I want that filter on the image so I look better, like Greta Garbo and Humphrey Bogart. That filter over it to make you look better. But the issue is the tech is continuing to evolve, and it's displacing the old tech. So you have to embrace it, but now you can own it. Mm-hmm. So in Web 1, TCP/IP, which we're using right now and we use every single day of our life, is this amazing tech. And Vint Cerf, he invented it, and this guy, Tim Berners-Lee, codified it in code, and now we all use it every day. But they didn't get rich because they couldn't own it. So who got rich? The application layer. So the application layer, all the applications were built on top of these protocol layers. Well, now we're in a world where the protocol layer and layers, right? Because there's Bitcoin, Ethereum, and Solana, all these protocols have captured about 80% of the value in the new web. And what's really interesting about this, I was listening to someone yesterday talk about, ChatGPT. And look, I was a huge ChatGPT critic early on. I was like, this thing is terrible. I mean, you ask it a question, it's totally wrong. It's got 2-year-old data. It's just not useful, right? I say, what's the meta deck for Magic the Gathering? And they would give me something from a year and a half ago. I'm like, that's not useful. I need to beat that kid now. Yeah, I need to beat that 9-year-old kid who's kicking my ass. Right. I need to beat him now. So give me some better cards. And they couldn't do it. Now it's almost up to date in real time. It's not quite real time, but it's getting better. But more importantly, the features of it are such that its agentic model, right, where it's kind of acting as this agent to give you things that you desire, whether it's questions or whether it's information. And the person was saying that their use of search has basically, Google search, basically had gone to zero. I'm like, mine isn't zero, but mine's come way down.
Yeah.
Because the real problem with Google search is remember, it's not search, right? It's indexation. They've created all of these websites that they own that send you to where the information is. Because like right now, I'll out myself on my addiction to now gaming, which is kind of hilarious. So now I'm a Monster Hunter freak. And this new game, Monster Hunter Wilds, is coming out in February, but they released the beta. Mm-hmm. And it's the most popular beta release ever. In fact, the beta today, it's only been out for 2 days, surpassed the previous downloads of the last version of the game in 2 days. And this is just the beta. And it's kind of wonky, but everyone's talking about this. And it's, you know how we can envision a world, and we've kind of seen it with some of the Call of Duty stuff, where you're like, is that video? Is that animation? It looks pretty dang real. This is pretty darn close to like real, like you can almost feel the wind like rushing over your shoulder in the tent. So anyway, where was I going with that? Monster hunting, like I need to know, okay, one, which weapons in the new game should I focus on? Well, I can type that into lots of different places and get an answer, because there are a lot of people right now, hundreds and hundreds of thousands of people around the world asking the same question. And so that's an easy thing. But the problem is when I do that on Google, it gives me a whole bunch of other stuff like, hey, don't you want to buy this game? I'm like, no, I don't want to buy that other game. Hey, don't you want to buy this tonic for your gray hair? Like, because yesterday I searched for purple shampoo for gray, and no, I don't want that. So all this sponsor stuff at the top. So now I just go to ChatGPT. And again, it's still not perfect, but it's getting pretty darn close. And I guess they are going to release a new search function. Now, what's interesting about that is the way ChatGPT works, right, is not search and it's not indexation, right? It's taking a word, right, based on a prompt, and then calculating the probability of the next word and the next word and next word. So it's creating a language model or language output from the prompt based on all the training it's done, reading all the stuff on the internet. So it's not really searching, it's intuiting what you want. And it's actually, again, got better and better. But search is different, right? Search is, there's a fact, and I need that fact, so go find that fact. Well, geez, searching the whole internet to find a little fact, that's a pain in the ass. So what we need to put all the facts in little boxes, like the old card catalog, and pull out the drawer. And so I'm not sure technically what OpenAI is going to do. In essence, are you just basically going to become Google, and you're just going to, copy what they did, and now you're going to have an index based on all of your, because every time someone asks a question, ChatGPT, they then get the information to create the website, right? That's how Google did it. Every time someone asked a question, they would gather information that answered the question, and then they'd refine that web page so that, hey, when I say what's the best weapon in Monster Hunter, it takes me to the place where Game Rate or Game Rant or whatever has, definitively said these are the best weapons. Again, not perfect because those are opinions, not facts. But anyway, yeah. So I do think this agentic world that we're moving toward, like we've talked about this last time, is you and I were having a conversation about this travel. Mm-hmm. We needed a new ticket. Well, while we were having the conversation, an agent will eventually go out and get that ticket for us and say, here you go.
Right.
And that actually is useful because it frees up my time. I don't now have to type, hey, I want to go from Raleigh, Durham to, Riyadh and go spend time doing that. Now you say, well, but you've done that. Why, what's the problem with doing it? Well, if I don't have to do that, I can spend more time playing Monster Hunter. No,
more time doing the stuff that you really want to do. And I think that's that's the goal of AI in general, right? Is to sort of free us from the monotony of things that can be programmatically done through a set of software and accompanying hardware to do more productive tasks. And our friends at Galaxy released this great report this quarter, which captured funding amongst the industry. So there's some good news and bad news. The bad news first, although I've always revealed my bias as being an optimistic person, which is needed generally in these times.
Yeah.
I'll say that the bad news is we're down quarter over quarter from Q2 about both the total amount raised in the crypto blockchain industry and the number of deals. So we raised 2.4 billion or deployed 2.4 billion, and then we've done 478 deals. So basically around a 20% decline on both. But the good news is that we're on track to surpass 2023 numbers in both categories. So a couple of spotlights that we talked about AI as being this category within blockchain that is increasingly getting larger. But number one is still far and away trading, exchange, investing, and lending, right? So like we've always mentioned, finance categories, those will continue to lead. Layer ones are actually still a pretty big category. So people are still trying to find those core use cases. Gaming and metaverse, number three, infrastructure more broadly defined, and then AI. So AI has become a top 5 category, and it's really seen a 5-fold increase in crypto VC quarter over quarter. So this is a very big shift in companies like Sentient raised 85 million, Cent AI, and Sahara AI. So really, these are kind of...
Well, it is kind of funny now that, we're having an AI, a dot AI boom, like we had the dot-com boom, and it'll end the same way, right? The vast majority of the things that just put .ai at the end of their name won't actually be, well, they might be artificial, but they won't be intelligent, and there won't really be any there. And it's fine, because you need all of that durm and strong, or whatever the word is, to happen. You need all that turmoil and all that creative destruction, and throwing stuff on the wall and see if it works to make the long-term work. Because, Andreessen had this great quote, in 2001, everything had crashed, and pets.com, that little sock puppet was on the cover with the tire track over saying, the end of e-commerce, and everyone got a box from chewy.com this week. Yeah, I did. So no, it's not over. Or Webvan went under, and anyone gotten food delivered by anything, DoorDash or Amazon? Yeah, I did. So that didn't go away. And he said, look, all of this is right. All of these ideas are good. They're just early. Mm-hmm. And the same thing with all of these ideas for agents and all these ideas for integrating AI and blockchain intelligence, our term that you guys coined, that is that intersection of AI and blockchain. And ultimately, all of this goes back to the title of our show and our investment philosophy, the ABCD, that everything in the world is about data. Everything is about data. Whether it's data that's organized into information that we consume, whether it's data that's organized into numbers for value, which is we transact. It's all about data and how we use but data, been called the new oil, right? Like oil, if it's below ground, it's not really that useful. It needs to be extracted. It needs to be refined. Even the black goo that comes out, it's really not that useful. It has to be refined and split into its component parts. The scariest part about that, X, I don't know if you've ever seen the thing where it shows the barrel of oil, and you get the first part that becomes gasoline, and then jet fuel, and then distillate, and then kerosene, and at the bottom there's like hundreds and hundreds of things that then go into our bodies and on our faces, and like Vaseline petroleum jelly. It's like, wait a second, that's made from oil, and we're putting it on our skin, or we're in
like the old quote, Mark, right? Dust to dust, ashes to ashes. We were once a living substance. Back to your chemistry.
Yeah. And it is. To be fair, it is just atoms, right? Carbon atoms and other And once it gets refined, then you can extract those things, and some of them are non-toxic, and you can ingest them. Some of those dyes that they make from it, probably not good for you. But I think what's interesting about that is data has to, the same way, it has to be extracted, has to be organized and stored. That's what the blockchains do. And they are far superior in every way to any way we've ever stored and organized data in the past, right? Just far superior. And everybody say, oh, you can do that with a database. Well, no, you can, but it's not as functional, and it's not as secure, and it's not as long-lived. So this is better. So all that stuff is going to go away, and this is where the data will be stored and organized. And then you actually got to process it. And processing is getting harder and harder. I'm going to give another shout out to this guy. We met with this young kid, and I was wrong. He's not 29. He's 33. This Duke PhD that we've talked about before. That, we've been making a lot of investments in the chip sector, and the innovation in chips right now is mind-boggling. I mean, just mind-boggling because of the demands on processing power for AI and how much processing power you need to do a ChatGPT prompt, or to do inference the way it happens in 3 dimensions. And this kid, and I say kid in a loving way, not in a disparaging way. I mean, because he's young, but man, the brain on this kid and the way they have said, okay, well, normally chips are made with silicon and copper and you got the transistors, and that's all well and good. But there are limits to how fast electrons can move in the substrate. Photons go faster. And so they've created, it just boggles my mind, a way of depositing liquid crystal onto silicon and using photon channels to basically create 3-dimensional graphs and multiplication matrices. Again, if you think about electrons, okay, you gotta point the electron in all the different places and make the matrix, and then you got to do an operation, and then it's got to go back and forth between memory, and that's why there's all this heat. And he's like, well, photon's actually kind of better because I can take my photon beam and I can break it into all its different components, perfect copies, like going through a prism into colors, and then I can spray that on my liquid crystal, and so I can create my matrix instantaneously, and then I can do that on multiple layers of the substrate. So now I got a 3-dimensional matrix, and I can do instantaneous calculation, like in 1/1000th of the time, and I'm just like, oh my God. I mean, that is, one is mind-boggling, because now you're talking at almost not subatomic, but basically at atomic scale, like down to single electrons and photons. But if the chip does work the way they've simulated it, and there's still some slippage there, but if that works, how big is that industry? Really big. How much energy will we save? And just again, if we save all this energy, well, then what do we do with all that excess cash that we don't have to spend on energy? We'll probably spend it on other accretive incremental stuff. Maybe we'll put some in Bitcoin. But it's super
super interesting. And I think, an idea of where folks are parking their money now is a story that we've kind of talked about a lot. It's this idea that stock markets around the world are up. Investor confidence is still low, relatively speaking. And so speaking about Meta and Microsoft, so even though they have extremely high valuations now, the recent earnings report fell a little short of expectations, but both companies, they showed stronger than expected revenue and profit growth for last quarter in September, but their shares dropped after their kind of conservative forecast for December. So like we've said many times, they're kind of like 2 ways to kind of boost that. One, you can innovate, which will be hammered on your stock price if you do that and deviate too much. Or you can kind of look for other areas of investment and kind of look to acquire your way out of this. So both Meta and Microsoft have allocated 24 and 28% of annual revenues to capital expenditures, respectively. And this is coming heavily within AI. So this is a trend that we're seeing.
Well, now, this is really interesting, right? Because so everyone's all psyched about NVIDIA, right? And NVIDIA, it's been this rocket ship because their revenues went, through the roof, right? Well, their revenue is someone else's expense. And you just said it, right? If 20 plus 28, almost 30% of these, hyperscalers revenues have to go to buy these chips to process faster. Okay. Well, but then we saw this week a little story about SMCI, super microcomputer. They were buying all these chips from NVIDIA, right? Well, then why did their auditor resign? Like literally the auditor said, we're outie. EY said, nope, we're out. Stock plummets 33%. Now, interestingly, NVIDIA stock just kind of sat there and the other hyperscaler. I'm like, we've seen this movie before. And look, I'm not saying this is going to happen exactly the same way, but we have seen this movie before. Cisco and Nortel had the same kind of thing where Cisco was reporting these huge numbers because Nortel kept buying this stuff. Well, then it came out later that Cisco was doing some funky stuff about writing off inventory and then selling it again at zero cost of goods sold. So they showed all these great profits. When it came to light, the auditor actually said, no, that's not the way you do it. They had to restate and boom. And it began this massive, 84% correction. Again, I'm not saying everything's going down 84% in the stock market. What I'm saying is if the SMCI thing isn't unique, it's usually not, right? I don't know if you ever lived in a place that has cockroaches. I used to live in Houston. If you see
I lived in New York City, so there were plenty.
Yeah, if you see one cockroach, there are a lot of cockroaches. I mean, the worst thing ever, not to gross everybody out, but my parents had the house bombed. They put those little fumigator things in.
Oh, yeah.
I'm not exaggerating. The hundreds and hundreds of cockroaches that crawled out of the little cracks in the walls and started falling down. I'm like, oh, I mean, it was horrifying. I mean, it was literally like a horror movie.
Oh my goodness.
So anyway, but the other thing is, okay, so if the equity markets are fully valued and the innovation is about to shift, now, what does that mean? Well, now, does that mean that we're going to see what happened to, Intel was here and NVIDIA was here, and it went like this, right? All of Intel's market cap and then some went to NVIDIA because it turns out Pentium chips and other Intel chips couldn't keep up with GPUs. So long story short, where's the capital going to flow? Well, I think, and we're seeing it, it's flowing into digital assets. So here's the amazing thing. In the week since we recorded, Bitcoin is up 5%. Up over, $71,000. In the month, right? We've been, doing this in the past month 4 times. Well, we did it 3 times because we skipped a week because we were in the Middle East. But in the month, we're up 13%. In the year, we haven't been doing this quite for a year, but in the past year, it's up 103%. Whoa, wait a second. I mean, and I wore my, Bitcoin's dead socks, rest in peace. For Halloween, and they're the little tombstones with and then the Bitcoin symbol with those.
Perfect for Halloween. Yeah.
And Bitcoin's not dead. It's been declared dead like 500 and some odd times. There's actually a restinpeacebitcoin.com website that tracks all the times people say it's dead. So here we are, 16th anniversary of its conception. Actually, birth was in January, so that would be the 16th birthday. And not dead. In fact, $1.4 trillion with a T. And what's interesting to me is this past week, we came super close to the previous high in February. I mean, super close, right? In February, we hit 72,746. And this past week, we hit 72,734. So almost got there. But as I keep talking about, for the last 2 months, we have made now 4 higher highs and 3 higher lows. That means we're back in accumulation. So someone, whether it's Abu Dhabi or others, or, just the hodlers are acquiring more, someone's accumulating this asset. And we know it's the BTC ETFs, although the caveat there is that somebody posted this thing, he posted a chart of all the inflows to the Bitcoin ETFs, and it's, billions and billions of dollars. And I think there's even one $3 billion day. And how is it possible that the price is down with all this accumulation? I said, hello, you do know that some of the biggest customers of the BlackRock ETF in particular are hedge funds that for every dollar they go long the ETF, they are short $1 or more of Bitcoin futures. So that is happening. And so when Millennium says they're long $2 billion, they're not, because they don't have to report the short side. So they're a market neutral fund. So they are equal dollars long and short. And so that's why the price is being tamped down. But from February to October, we kept making lower lows and lower highs distribution, right? That meant people were selling into that. So, those ETFs just keep buying. And now everyone else said, oh, wait a minute, they're buying, then I need to buy.
Yeah, the next top up in the ceiling to watch for is that 80K mark. And I think what was really interesting with the report from our friends over at the recent report that we read over on Grayscale is that there is this dislocation between now, there was a multi-year link between the price of Bitcoin and investment flowed into blockchain startups and Bitcoin related startups. And so this year, that link has kind of broken. So we've hit these higher highs, but the inflows haven't sort of matched up with that. And I think AI is sucking some of the oxygen out of the room. We're seeing kind of that accumulation pattern, as you mentioned, happen with, the public companies looking to cluster and huddle around. And it's not just them; it's also other financial institutions like KKR, which has pledged 50 billion, 50 billion, along with energy capital partners towards data centers and power generation to support all the AI. So I think that AI is not going to be a bust cycle, because I think AI is getting confounded with high performance compute and R&D. And that won't stop, because the demand for us to have more data, faster devices, and always on services is going to continue. Now the names will change in terms of what are some of the trends, but there's an interesting chart, Mark, that we could probably segue into for the chart of the week, that if we're talking about all these chips and semis, well, are we going to have enough people to be able to work in these industries to satisfy this demand? And this is a very interesting trend that McKinsey has just reported on. So let me know if you can see my screen, and I will present here. Okay.
All right, coming up.
Let me know if this comes up. Okay, great. So this is showing that the potential for those that are on audio only, please make your way over to YouTube. You can see all these fancy charts, Mark's stock reveal, and next acoustic live set next week. So we'll say that the potential for engineering and technician talent gap in the semiconductor industry could be as much as 59,000 to 146,000 workers by 2029. And we always get this question, Mark, about, can we get some practical advice from the show? Okay, listeners, move some of your talents into chip making and be part of the growing trend, because there are going to be opportunities here abound. Mark, can we get some of your thoughts as you see these big opportunities there in terms of the demand and the supply?
It's incredible. I mean, we talk a decent game about STEM education in the U.S., science, technology, engineering, and math. But it's mostly lip service. I mean, it's not all lip service, but it's mostly lip service. I mean, the stat that still blows me away, X, for every engineer that we graduate in the United States, South Korea graduates 17.
Oh, wow.
For every lawyer that they graduate, we graduate 40. I would say that because they're a country of wealth creation. We're a country of wealth redistribution, right? So we need more engineers. And, if you got kids, right, you should move them in engineers. Oh, we don't need engineers. We got AI is going to do all the coding. It's not about the coding. The coding, will be done by AIs and agents, but the design of chips and the design of systems and the design of data centers and the design of, because like if you say to ChatGPT, okay, how should I cool my data center? It will read all the history of all the ways that people have cooled data centers, and it will report to you, well, here's how to do it. Okay, but now that's not working anymore because there's so much heat being created because these things are processing so much faster. That's just not useful. You have to take your brain and think differently. You can't just think about what has worked or what has been done. And we actually made an investment in a company that did that, right? This human, this professor at Princeton said, well, why is there so much heat in these chips? Well, it's because you got the processor here and you got the memory here and you got to transfer back and forth many times, okay? And that transfer goes through the electrons going through the wires, and that causes friction and causes heat. It's like, well, what if I shrunk the distance? Less heat. Well, Jesus, what if I put the processor in the memory so it wouldn't have to move very far at all? There'd be almost no heat. Pretty good. So this company in charge, they did. Now they have a chip. And now you don't have to come up with a creative way to cool because there won't be as much heat. There will still be heat, but not as much. Well, now let's take it further to our buddy from Duke. Electrons create heat because there's friction. Photons, no heat. No heat. So now we don't have a heating problem. We have we got to figure out how to make liquid crystal pure enough and thin enough that we can shorten the gap between the calculation surfaces. Okay, that's what they're working on. But if we get to the point where photons, and so asking the computer what's the best way to deal with electrons isn't going to get us to how do we deal with photons. So we need humans, technical, focused, creative, and this is a total revamp of the entire education system. Our education system, right, was designed in the 1860s to produce factory workers. What do factory workers do? Well, they don't question authority ever. They're very comfortable doing repetitive tasks over and over, and they don't ask questions. They don't try to reason. Okay, that's a bad system for a world in which we have to constantly be asking questions and pushing boundaries and coming up with new designs. So, send all your kids to Montessori school and then push them into fields like engineering, where it's all about problem solving and ideation and creating new ideas.
So we've got this gap, Mark. We've got 5 years of a projected shortage of thousands of employees. This is right around the time where I'm sure you've been asked, I've been as well, to write a couple of college letters of recommendation. So I guess behind the scenes, I'm telling these applicants to, at the very least, minor in something related to these sciences, because I think what's going to happen, potentially, you run the risk of countercorrecting too much, and then you're not having sort of design-focused thinking, and you're not going to really have the nice front ends that you need, the nice creative problems. So it's one of those things where I think that this will be addressed, because in the end, labor follows capital. People are going to see this and they're going to just jump all over it. But you want to make sure, exactly as you pointed out, that it's not just about being able to do the code. It's about being able to think in code, and by being able to figure out those problems.
So good. And look, the cool thing is, and we know this, everything new is created by young people. I mean, it doesn't mean that we're bad when we get older. It's just that we're burdened by what we know.
Yeah.
A young person like this, I can keep coming back to this kid at Duke. He wasn't burdened by the idea that, well, you can't process mathematical matrices and vectors using glass, right? He wasn't burdened by that. Like, I know that's not possible because that's never been done before. He was like, well, I don't know, let's try it. So that's pretty cool. And, Larry and Sergey, they were like, they were 20 and 21 when they founded Google, right? They're like, well, I hear what you say that you got these search engines that they go out in the internet and they search for stuff, but that seems really inefficient. And if the internet gets even remotely big, it's going to take a long time. So how about I create pockets of information, indexes, and I channel queries into those indices, and I make the indices better based on the quality of the questions. That's innovation. And I tell you this all the time. I mean, I remember our board, a bunch of old guys, all old, sadly, no diversity at all. And they said, that doesn't make any sense. Why would you back the number 21 search engine? We're not. We're back in the number one. We didn't even know the name at the time, but this new idea. And so innovation, right? It's what we do, right? We invest in innovation. That's our job. And the coolest thing about it, it's the secret sauce. It's the fifth asset. Stocks, bonds, currencies, commodities. Those four do not exist without innovation. Innovation creates all the companies that then issue stocks and bonds, and we trade in currencies and commodities. And that's amazing. And it goes down even beyond that. It goes down to the base layer, right? We call it the ABCDs. There's A, T, C, and G. So all life made up of four components. What? All the information that people are watching right now is made up of two components, ones and zeros. That one boggles my mind. I mean, literally boggles my mind. How'd they get that red pixel on the wall right with ones and zeros traveling across fiber optic cables? I don't understand that, but I don't have to. So innovating around these new ideas and building opportunities for investors, I mean, it's the greatest thing ever.
Well said. And we'll remind our listeners, as always, please rate, review, and subscribe. I think what you're starting to see is a race towards the finish here at the end of the year. 85% of the funding mark was in early stage, so only 15% was later stage. We see what's happening with the public companies. They need to acquire companies. We see what's happening with the labor shortage. You need to work in these areas.
Look, man, I gave you fireworks. I gave you fireworks on that.
As always, stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.